AT&T stock ticker T is currently trading at $17.10 per share. We can see year to date they're down about 11%, and over the past 5 days though, they're up 12.43%. That's a huge jump up in their share price, and if you've been watching the stock, you know that's because they recently released their Q3 earnings report. And if we scroll down a little bit here, we can see they earned an adjusted 68 cents per share and $30 billion in revenue, which beats their estimates of 61 cents per share and $29.86 billion in sales. If we scroll down a little bit further, we can see for a lot of their products, they are recording stronger subscriber growth than they were originally anticipating, which was a huge concern for the company. So that is a very good sign. Because of this, we have a lot more analysts becoming a lot more bullish on this company. So in this video, we're going to be jumping into my stock valuation spreadsheet to see if AT&T is a stock we should consider buying or selling. And on this spreadsheet, we're going to look at 4 different valuations. We will look at a grams valuation, we'll look at discounted cash flow model, a multiples valuation, and a dividend discount model. And all 4 of these valuations will roll into our output tab. So let's go ahead and jump over to our stock screener. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. But the first thing we're going to do is we'll come up here and we will plug in AT&T stock ticker and hit enter, and you can see all of this data is going to automatically load in. Now we're currently looking at a 500-day change. Let's go ahead and zoom in a little bit on this more and do 250 and hit enter. And we can see the huge decline in share price and then a huge spike up over the last few days. Now, if we come over here and look at the dividend data, obviously a very strong starting dividend yield for AT&T, sitting at 6.5%. Now, it was over 7% before this huge jump up, but still a very good starting dividend yield. Payout ratio currently sitting at 66.8%. Now that's been a concern for some investors, but we'll come back and look at this in just a little bit. Analysts currently have a price target of 20.81, and the beta for this company is 0.53, so you shouldn't see a whole lot of volatility. But let's go ahead and look at our first valuation, which will be grams valuation. Now there's a couple of different things we need to note about this valuation. There's a few driving factors, but essentially here's the formula for this valuation model. But the main factors for this formula is going to be our earnings per share, our growth rate, and then the current yield on AAA corporate bonds. And we can see we have the earnings per share listed. Then we have our growth rate projection listed, and I currently have it listed as 1. Analysts did have it slightly lower than this, but after this most recent earnings report, I think people are going to bump up that growth rate projection slightly. Now, the current yield on AAA corporate bonds continues to climb higher and higher due to the market conditions, currently sitting at 5.31, which does lead to a lower valuation. But even then, we can see this comes to an intrinsic value of about $17.77 per share, which is still higher than that current trading price. Let's go ahead and jump over to our next valuation, which is the discounted cash flow. And in order to perform this valuation, we need to project a growth rate to the future free cash flows for this company. So typically when you do this, what you want to do is you want to plug in historical free cash flow and see our year-over-year growth rates. Because AT&T recently had their spinoff with Warner Media, their free cash flow is going to look a little bit different, but we know what their projection is for the current year. And then based off of analyst expectations, we can project a growth rate of about 2.5%. So again, not a very high growth rate moving forward, but I am projecting the 2.5% growth rate to the future free cash flows and the terminal value, which is the sum of all the future free cash flows past the year 2030. I then found the present value of those future free cash flows, as we can see here, and added them together. I added AT&T's cash and cash equivalents, their total debt, which is still pretty large despite the spinoff with Warner Media, and that gave me the equity value. And after I had that, all I did was divide by the shares outstanding, and I came to a discounted cash flow price per share of $18.21. So again, over the current trading price for the company. Now moving forward, we're going to glance at the multiples valuation. Now, a multiples valuation can be a really good way to value a stock like AT&T, but they really don't have a whole lot of good competitors, I think, that provides a fair valuation. The most obvious one is going to be Verizon. So something we will take note of is Verizon's currently trading at a price to earnings multiple of 7.68. And if we jump over to our stock screener, AT&T is trading at a price to earnings of 6.38. So that might be a slight indicator that AT&T is undervalued, but I'd really typically like to see more comparisons than just one company. Now let's go ahead and jump over to our last valuation, which will be the dividend discount model. And again, obviously a lot of people want to invest in this company solely for the dividend, which is understandable. They have a great starting dividend yield, currently sitting at about 6.5%, but is that sustainable? And the idea behind our dividend discount models, we should be able to value a company based on how much they pay out in dividends and how much that dividend is increasing. And again, we can't look at the historical dividend payouts because of the spinoff with Warner Media, but we know how much they're going to pay out this year. And then based off of analyst expectations, we can still project a growth rate. Now I'm projecting a semi-okay growth rate of about 3% and a discount rate of 8.5%. But one of the big questions about this company is that growth rate going to be sustainable moving forward? And again, if we jump back over to our stock screener, I'll mention the payout ratio currently sitting at 66.8%. So not a red flag type of high, but it is higher than I typically like to see. But something that's really good about this most recent earnings report is right here. We can see the telecom's third quarter free cash flow exceeded its dividend significantly, which is a huge sign for people who are investing in this company for the dividend. I think it will be sustainable for quite some time to come. I think a growth rate of 3% is very realistic. When you apply all that together, we come to a dividend discount model price per share of $20.82 per share. Now, jumping over to our output tab, we can see the three valuation models that we use: Grams at 1777, discounted cash flow at 1821, and dividend discount model at 2082. When you put all these together, we come to an intrinsic value of almost $19 per share, not quite. The current trading price for this company is about $17.10. But let's say we want to apply a 10% margin of safety just as an example. Based upon this, our acceptable buy price is very close to that current trading price, $17.04 per share. So not quite a buy, but it is very close. Now keep in mind, just a few days ago, this company was trading as low as about $14.63 per share. So there was a time when it was in that buy range. I think I made a couple of analysis on this company a month or two ago, and if you were watching then hopefully you took advantage of that opportunity. But this is just another example of really finding companies that are undervalued and align with your investment goals. So if you're seeking out a higher yielding dividend investment, maybe AT&T does fall into that. Keep in mind, you might not see a lot of capital appreciation moving forward, but that starting dividend yield is obviously very attractive. As for me, I might consider adding more shares if it goes back down a little bit lower to that price we were just seeing, but I think for a lot of people it could fall into your investment goals. So maybe it's a stock worth considering adding to your watch list. But go ahead and let me know what you think of this company down in the comments below if you plan on buying or selling. If you'd like to be able to download the spreadsheet, you can head over to my Patreon page at the link in the description. So that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.